The Parliamentary Committee on Finance has opened its doors to collect views from sections of the public on the proposed tax measures for the financial year 2026-2027.
All these interests can be put under one umbrella.
The Private Sector Foundation of Uganda spent the better part of Monday at Parliament presenting its position on the tax proposals. PSFU expressed dissatisfaction with the annual tax changes, noting that they destabilize crucial long-term investments whose returns take time to materialize.
If this could be done at least in a period of 3 to 5 years, it allows for predictability, especially for sectors which have a long-term gestation period to realize returns on investment.
The private sector also benchmarked the excise duty proposals, opposing the planned increase of tax on fuel by 200 shillings. They further objected to reforms on the digital stamp system, arguing that the changes could heavily burden the manufacturing sector.
On average, manufacturers, for instance, within the beverages sector, they spend about $3 to $7 million on an annual basis just to be able to comply to paying excise in buying these stamps. So, Chair, our proposal has been if the cost of these stamps could significantly be brought down to enable flexibility of these manufacturers.
Government has proposed increasing the pay-as-you-earn threshold from 235,000 to 335,000 shillings. While PSFU welcomed the move, it requested a revision of the proposed tax band, suggesting that the 30 to 40% rate for those earning above 10 million shillings be adjusted to apply from 17.4 million shillings.
By then, when the law was enacted in 2012, many people who were earning 10 million were very few. Actually, people who were earning 10 million were quite lower compared to the current number. So most of the organizations currently are paying above 10, 20, 30. So we think that if someone is getting 10 million, is going to face the 40%. Why can't this be adjusted to 17.4 million so that there are still more disposable income which will be able to be picked from the other side of excise duty and VAT, which has been done.
Some MPs expressed concern over the already rising prices of commodities on the market, despite the tax regime still being under consideration.
The Ministry of Energy has recently said that the Ugandan companies who are involved in importation of fuel or dealing in fuel should not increase prices. But ever since this bill was presented, the palm prices have actually gone up. Not because of Strait of Hormuz, because our government-to-government arrangement.
Yes. So when you look at all the commodities that are in this excise duty bill, the prices have already gone up. And the argument from the traders, they claim they are getting a price increment from the factories, because they are saying the factories have, all the factories have increased that are dealing in these commodities. So I think
PSFU acknowledged the situation but attributed it to global shocks in fuel prices. However, MPs found this explanation unconvincing.
The reaction in the market had been there, but because people heard of this tax increase, they tend to interpret or speculate that the slight increase that is there at the pump is a result of this tax. But I would want to think it's as a result of the global trend, because even, for instance, countries like the United States, which only imports about 2 to 5% of their fuel from the Strait of Hormuz, they have had about 13% increase in the pump prices.
Daniel Mugoya, Gregory Tabinji, UBC News.